And it's an exciting idea that we can, that carbon can be both an issue for us and an opportunity. And we've got 6 perspectives today on that opportunity. The first of which is Bill Pazos, who's the co-founder and managing director of AirCarbon Exchange, a frictionless carbon exchange offering the lowest fees in the industry and an architecture which will allow the carbon market to expand efficiently. And Bill's having an exciting day today with a set of big announcements about exchanges. So I'll let him take it from here.
All right, thank you so much. And thank you everybody for your time this either morning, afternoon, or evening, depending on where you are. I'll give you a very quick update on what we are and where we're moving to, and then we can talk a little bit about the carbon markets and where we see that where we see that going. So we began AirCarbon about 3 years ago. When I say we, it's my partner Tom McMahon, who has about 30 years experience in the commodities industry, and myself, who has 20 years of experience in the commodities and in the carbon industry. So what we set to do 3 years ago was really just to bring commodities architecture to the carbon markets. So if you look at carbon markets as a whole, they tend to trade no differently than paintings. There's an entire conversation about the underlying carbon credit every time a transaction happens. It's obviously impossible for us to scale markets if we operate in that capacity. So what we did was bring traditional commodities architecture. What does that mean? So if you look at traditional commodities, they sit in a warehouse. What trades on the exchange are digital receipts pointing to the warehouse. So we created that construct for the carbon markets. So you have a liquidity that quickly scales. What's interesting about the market today, and as we sort of on the tail end of the Glasgow Pact, is that there's been a change in the market where I think an unintended consequence of the Paris Accords and the Glasgow Pact is that you have countries that are now looking to have their own exchanges, or countries that are looking to control their carbon stock, understand the underlying asset that they have. And so that is the sort of what we have sort of tapped into, that necessity for carbon for countries to have an idea of what their carbon stock is. So our announcement today that we're expanding into Indonesia together with CarbonX is exactly that, to create a local marketplace so that carbon credits can transact locally and give transparency to the carbon market, to the regulatory authorities, and most likely in Indonesia, for them to be able to tax some of those revenues that are going to come from the carbon market. So it's not just a question of understanding what their carbon position is in relation to others, but it's also to be able to tax the underlying carbon credits. We've also announced the same sort of infrastructure in Brazil, and most recently today that we were in the news for Abu Dhabi. So that's what we're all about, and we think that really the market is today we're just sort of scratching the surface, right? If you look at the total amount of the voluntary carbon markets, you have you've got only 0.2% of the global greenhouse gases are actually being addressed. So if you think of it as a very small part of the underlying market is being addressed today, and we will be expanding exponentially. If you look at the carbon trading markets that are popping up around the world today, we have over 24 emission trading schemes around the world, and you see carbon trading markets in now coming up in Singapore, in South Africa, they exist in Colombia, and so we expect that trend will continue, and that carbon and carbon trading will become a bigger and bigger part of the solution. But as we sort of look at that solution, one of the biggest, I think, issues with the market in terms of scaling is supply. So we find that there's a significant bottleneck in terms of bringing supply to market. Today, if you think of the players that are currently in the market, they are probably a drop in the bucket in relation to the total number of companies that will be active in the market in as little as 1 year from now. And so if we already have some supply constraints today, I can imagine that this will only aggravate in the future. And so we have certain sort of bottlenecks. One is the registries themselves. We're very dependent on Verra, who accounts for 60% of the voluntary carbon market issuances. And there's a general sense in the market, and I don't have numbers to back it, but there's a general sense that issuances are definitely lagging and taking maybe a little bit more. They're doing a fantastic job at Verra, and we just have to be patient with them as they scale and sort of accommodate themselves in what this market is turning into. The other issue, obviously, is how long it takes to create an underlying carbon credit. So there are certain projects that simply just take longer to gestate, and we're at the beginning of that cycle. And so we're seeing more and more investments going into these types of projects. We're seeing companies that are being listed on Canadian stock exchanges that are solely geared to invest in carbon projects and bring them to market. So slowly but surely the market will adapt, and you'll see more funds flowing into carbon mitigating activity. And the most important part of that is creating a price signal that makes sense. So if we've got a price signal that is robust and that market players can trust, then that translates into investment into carbon mitigating activity, which then will satisfy the supply side of things. One of the things that's interesting about supply and as it moves forward is if you look at the total amount traded in the markets today, a huge percentage of it is that overhang from Kyoto and renewable energy type of credits. There's also a preponderance of trading within nature-based nature-based credits. Interestingly, though, the highest price credits are on the removal side of things, on the agricultural side of things. So those credits are now at a premium. And what that should tell us is that the market will tend to move in that direction. So today we're sort of working through a legacy inventory, and then at the same time we are sort of working heavily on the nature-based side. But we should expect, at least the price signal is telling us, that we should expect significant investment to go into the removal space, into the agricultural space, which will then change the makeup of where carbon credits are going to come from in the coming years. And transaction volumes are basically telling you the same thing, right? A couple of interesting points to make is that as a result of CORSIA, I believe it's as a result of CORSIA, 2016 has become a sort of inflection point for prices in the market today. So if you've got a carbon credit from a specific project and you happen to be sitting on a 2015 vintage, and you have and someone else has a 2016 vintage of the exact same project, you end up having a price differentiation of 2x. So a $7 nature-based project from 2015 and a $14 2016 price. So the market is full of these sort of unexplainable idiosyncrasies that will slowly but surely sort of iron themselves out as the markets coalesces around tradable instruments. I was going to ask you, David, how are we doing for time? Do you want to sort of jump onto some Q&A or?
That's up to you. That's up to you.
Okay.
We can if you'd like. You're at 10 minutes, so.
Yeah, all right. So why don't we do that instead of me rambling on?
Sure. Well, you've got a couple questions in the Q&A, and people, if you have other questions for Bill, please put them into the Q&A when we'll sort through them and feed them up to him. One person has asked on the Canadian question, are you seeing players in Canada participating with lack of protocols, and is measurement and verification still one of the biggest barriers with voluntary markets?
Well, we are seeing more and more Canadian companies coming into the fray. And I think it actually has to do with the fact that they have an infrastructure in place to raise money for mining projects. And so what you're seeing is that companies like carbon streaming, companies like Base Carbon are both sort of following that blueprint to sort of tap the market and then generate interest in investing in carbon projects. So those are that's what I alluded to in terms of the Canadian carbon markets. In terms of the whole sort of integrity and measurement and potential openings for double counting. I think that if you look at the market today, it's very difficult to come up with an example of fraud or an example of where there has been double counting. Whenever you sort of mine down and ask people for an example of that, you end up with someone talking about an EUA scandal that happened in the early 2000s. So what we do have in terms of integrity is we have a huge overhang of carbon credits from the first Kyoto era that are being judged based on today's carbon rigor. And clearly they don't hold any water. So if they should be in the market or should not be in the market, that in fact is up for debate. But is there sort of wholesale fraud happening? I tend to disagree. I think the market is extremely transparent.
Another person, Brian Heilman's asking that major integrated oils have been suggesting the correct pricing for carbon, for example, RDS and Exxon. Are they active participants in carbon markets now that you're seeing?
I don't like to comment on any particular one, but the ones that have been mostly in the press are Shell and BP. So those two are at the forefront of the oil majors in terms of their activity, and then probably Chevron. So I have not seen Exxon in any meaningful way in the press. That's how I would answer that.
I have someone's here is asking about the removal you mentioned. So Corrine Rivera asked, you mentioned that removal is at a premium and that markets will move toward nature-based very soon. Is this to drive down nature-based credit costs? No, the market is currently very focused on nature-based solutions. I think the market will move towards more removals and agricultural type credits to sort of round out the market into nature-based removals and agriculture. There are some industrial type projects that will come out that I think are also relevant, but we're going to see less and less renewable energy credits just simply because they are no longer additional. Yeah, and are markets distinguishing between carbon associated with different agricultural goods right now? So the difference between, say, corn for ethanol versus soybeans and so forth?
I don't think so. I think what you're finding is that, there was a significant push in the US with companies like Indigo, and those companies were looking at row crops in particular and looking to entice entice farmers to adopt things like no-till and those types of activities in order to increase the carbon in the soil. So I don't think there was much of a differentiation across different types of feedstock.
Someone here is asking where you would, I mean, you've seen a lot of this, you kind of entered the market. Where would you direct someone, or really any industry player, looking to introduce carbon credits for a new area?
Well, I mean, basically what you need to think of in terms of carbon credits is the first thing you need to do is figure out what business as usual is. And then once you have business as usual, then you figure out if you can do something better than business as usual measured in tons of carbon. Once you do that, you have established a business as usual, and you've established what your carbon project is. Now, the next thing you need to do is you need to be able to measure that if you implement your activity, you will credibly be able to measure that reduction. And that's not always easy. So if you can measure it, you can verify it, then you can report it, and you've got yourself a carbon project.
Someone here has asked, have you seen or created tokens focused specifically on carbon sequestration or regenerative agriculture, such as making hempcrete or other products with carbon?
We haven't, and it's not because we don't want to. Is that the issue is that when you create a token or create a contract, as we call it, there has to be significant supply behind it in order for it to be credible. And as of now, there just isn't enough supply of any sort of removal credits out there that would justify creating their own contract.
Okay. Anatolan here is asking, have you seen any info on hemp as a new source? You're getting a lot of questions about hemp right now.
Yeah, no, I have not. But you know, I'm just one man, so maybe I'm missing something. I'll definitely look into it now.
Nice. Well, in the last couple minutes here, maybe we can finish on a great softball question that someone threw up to you. How does AirCarbon ensure the quality, robustness of the carbon credits entering their exchange?
That's actually pretty easy when you're a spot commodity exchange, right? Because we only take credits that exist within the registries that we work with. And you can only transact those credits on our exchange if you deposit your credits within our registry accounts. So that eliminates all the possibility of double counting right there, because there's a relationship, a one-to-one relationship between the credits that are in the registry and the credits that have been tokenized, and in other words, the digital receipts that exist on the exchange. So those two go hand in hand, and they're audited separately from the exchange itself. So that's one area where I don't think it needs to be you need to worry.
All right. So then in the last minute that we've got, not that this is a small question, but here you go. Just kind of at a high level, so we can tee up the others to share their thoughts on it too. Your thoughts on the SEC's new proposal and impact on the carbon market.
I think any sort of guidance from any of the regulators is very important. You know, so for example, we announced today that we would be the first regulated exchange in Abu Dhabi, first regulated exchange globally in Abu Dhabi. And the reason for that is that Abu Dhabi is the only country in the world actually that treats carbon as a commodity. Everybody else is treating them as intangibles, et cetera. And so anytime we have clarity from one of the regulators, it's very important for us. So I welcome you know, all news from that sphere.
Great. Well, that's a good note to end on then. Bill, thank you so much. That was a great 20 minutes. If there are any other questions, you guys are welcome to take it offline and reach out to Bill and continue the conversation. But thank you, Bill. Thank
you so much. All right,
Um,
cheers. Thanks again.